Well, hi guys, welcome to this Moneycontrol live stream. We're watching Earnings Express with me, Nandita, Khemka. Well, we are in the thick of the third quarter earnings season, and you know what? Today FMCG is in focus, given the fact that HUL will be reporting its numbers. And as usual, whenever there's a big FMCG, earnings coming out, I always rush to my in-house FMCG guy, Mangalam Maloo, and he's joining in today to put into perspective what one should be expecting, not only from HUL but from the entire FMCG pack as a whole. Great to have you here, Mangalam. HUL, let's kickstart our discussion with that particular stock. Volume growths last quarter were not very great, 2%, mid, low single digits. This time around, is it expected to be the same? Is there any improvement one can expect? How will the earnings really pan out for HUL?
So there are two ways you have to look at the earnings season this time around, and I'll speak about HUL, but if you notice the way the stocks have moved in the last 12 months, the ones that have outperformed are the likes of Titan, Tata Consumer, ITC, Nestle, Godrej Consumer. All of them largely belong to the premium discretionary part of things. Ex-ITC, of course, ITC rallied for a different reason itself. The stocks that underperformed were the likes of Marico, Colgate, Dabur and HUL. What's common between them? They have high rural exposure. Secondly, they have high exposure to the staples piece, which is not doing too well. So HUL, as a result of which, will fall into the high staples piece bracket, and as a result of which, not a lot better, or not a lot is expected in terms of betterment in the third quarter as well. First quarter was subdued. Second quarter, the environment was similar to the first quarter. Third quarter, the environment is similar to the second quarter, with just a little bit of a kicker coming in from the festive season. So there is very gradual recovery in rural India, but at the same time now increasingly discretionary expenditure is also at some point will start to hit a growth ceiling, right? So to that extent, for HUL, you are expecting 1 to 2% sort of revenue growth. Volume growth maybe 3% or 4%. That's largely because companies have now begun to cut prices as well. Last year it was all about price-led growth. This year it will all be volume-led growth. Unfortunately, the volumes aren't recovering while the prices are coming down. So you expect flattish revenues with volumes, beating revenues by about 1 or 2% at best. The only solace one will get is that gross margins for all companies will expand. However, because gross margins will expand, companies will have some dry powder to increase demand. What they'll do is plow them back into ad spends, as a result of which EBITDA margins are likely to remain largely stable or mildly positive from what they were same time last year.
But from the management commentary, really, would you be watching out for commentary on how the rural demand is really panning out? Because it has been patchy, to say the least. Any visible signs of improvement? Because there is the threat of El Nino as well, right? Warmer winter season as well, and there has been unseasonal rains also in some parts, right? So how should one really go about looking at the rural end of it?
I sense, if I was a betting man, I would bet my last dollar to the bat that the management will say we will see recovery only post monsoons, because that's what FMCG companies typically do. Post festive season, you do see some sort of cheer. This time around, the cheer was missing. Quarter 4 will see only some gradual growth over quarter 3 and quarter 2, but everything will then be pushed to post monsoon. So everything, all hopes will be pinned to post election, post monsoon, perhaps the government giving some more sops in the hands of people after the real budget and not just the vote on account. So all recovery hopes, unfortunately, to dash a lot of people's hopes there, would be pushed back to at least Q2 of FY25 or Q3 of FY25.
Right, let's also talk about stock companies like Tata Consumer. They have recently simplified the corporate structure as well, and now that suspense over the Chings. Tata Capital, and they'll also be acquiring Organic India, right?
Yes, that's correct.
Of course, the impact of that will be felt in the coming quarters. But for this particular quarter, when it comes to Tata Consumer, what would you expect? Were they losing some bit of market share in the salt segment and in other segments as well? How are things really going to pan out?
On the contrary, they're gaining market share. Okay. So the two companies that will stand out in terms of performance, one will be Nestle, because Nestle has consistently reported double-digit growth in their India business, so that's a positive. Secondly, Tata Consumer, 7 to 8% sort of revenue growth is what the street is anticipating. And mind you, for both these companies, you're expecting 15 to 16% plus EBITDA growth as well. These stocks have done well. These stocks are trading at expensive valuations, but there is growth. Street is rewarding growth. Similar is the case for, if you look at names like Jyoti Labs, last 3 or 4 quarters, they've outperformed the industry. You look at companies like Trent, Last 4 quarters, they've outperformed the industry. You look at something like a Tata Consumer, Mamaearth, everyone's talking about, what valuations, D2C and all of that and stuff. Last quarter, they did well. They did show margin expansion.
Yeah.
This quarter, they are likely to be no different. As the revenue grows, the margins will also improve over, same time last year, because the company is now seeing benefits of operating leverage. In an industry or in a sector where everyone is parched for growth, anywhere there is growth, they will rush. And that's what's, something which we are watching in the entire space itself. And I'm also looking at the way United Breweries performs as well, because the management joined us, a couple of months, just a month ago, and they said that now raw material prices are easing out. The prices of glass bottles are easing out. And with the new management at the helm, volume growth is likely to recover. So United Breweries, Trent, Jyoti Labs, Tata Consumer, and Colgate, along with others, are some of the stocks that I'll be watching out for this time.
Right, I have this one more question on how there are some regional players coming up in the rural segment, right, in the rural markets, who had left the market during COVID, right?
Yes.
But is there any risk of them eating into market share of rural focused players like, the likes of Marico, Dabur?
That's exactly what's happening. That exactly is why, the volume growth isn't as much as what the street is anticipating. And secondly, that's why the companies have to spend a little more on advertising, because during inflationary times, the regional players or the local players get out of the market because they can't afford the rising input prices and to increase the prices. So for instance, if you're buying something worth rupees 5, the price of that increases to rupees 7. You look at suddenly start looking at 7 rupee options that you have, because if you're spending 7, then why buy a regional brand, buy a national brand, buy an international brand? So as they say in FMCG advertisements, अगर वही सफेदी वही दाम कम दामों में मिले तो कोई ये क्यों ले वो न ले. So similarly, on the way down, these companies, their prices are 7-8 rupees, whereas the regional guys are still about 6-7 rupees or 5 rupees, because raw material prices have come down. So people start coming back to that. So the Indian consumer is very, very value conscious, and as a result of which, during deflationary times, regional guys increase their market share, and during inflationary times, the large organized guys, the guys who can take a bit of a hit on their books, go ahead and increase their market share.
Right, we saw Asian Paints coming out with numbers, volumes were pretty good, margins saw good uptick, but I think it's the top line growth that disappointed, right? But with the entry of newer players like Birla Opus, do you see Berger Paints and stuff and other companies, paint companies also face similar fate, or do you think for Asian Paints it was a better quarter, it being the market leader?
So, there are two ways to look at it. One, you have to look at the business, you have to look at the stock. Is Asian Paints business going to get impacted? Perhaps, perhaps not. I mean, the last 1 year itself, we had 3 new players enter, right? In that as well, their revenues increased, their margins improved, right? And some of the early products of the Birla Group are also in the market. Asian Paints continues to grow at par with the market, if not better, and at that base, 12% volume growth in the third quarter or 15% CAGR over the last 4 years is not particularly bad. But what is the street fearing? I mean, despite the numbers that you spoke about, which were so good, the stock is down 5% in the last 2 days. Because while it may be a great company, is it a good investment right now? One does not know. Largely because one, it's trading at 55 times 2 year forward earnings. Secondly, there is this risk of disruption. Will Aditya Birla's entry impact their market share? May or may not. But will it impact the way the industry functions? Most definitely. Because they could increase their distribution, increase the trade margins, see an improvement in, some sort of trade practice, some product. If nothing, they will advertise. So Asian Paints will have to advertise a little more. There would be some disruption in the space, which is why the street believes that maybe for a stock which is trading at 55 times, no matter how good a business it is, some disruption, so might as well scale their expectations down a little bit.
Right, got it. But in terms of discretionary demand, we've already seen stocks like Titan, as you mentioned, doing fairly well. In its third quarter business update, it said that 20% plus growth in the jewelry division. But eyewear division continues to, languish. Not languish, matlab, it is not.
It's not growing as much.
Yeah, it's not growing as much. So for Titan particularly, do you think jewelry is the one mainstay that will drive growth this time around?
That is what Titan gets its valuations for, right? So you will be watching out for the jewelry business of Titan. But what's interesting is that now increasingly this unorganized to organized play in Titan or the jewelry industry has now been democratized to the likes of Kalyan.
Yeah.
There are some other players as well. Senco Gold, for instance, saw 70-80% stock price move over the last few months, ever since it listed as well. Then now there are a couple of newer listed players too. So the street is saying that, okay, if everyone is moving towards the organized side, let's look at the person who in a region is extremely strong and is offered at a significant discount to the market leader, which is Titan. So now it's that discount shopping which keeps happening during the bull markets. So which is why you've seen over the last 1 year, even as Titan has grown and it's grown to the largest that it's ever been, the stock price is still at a record high today as well.
Yeah.
The concern is, will it continue to move as much as it has in the past? Perhaps not, because of the headroom that isn't available in valuations. That's why people are bidding over Kalyan, which has done a lot better in terms of a stock price return, Senco Gold, which has done a lot better over the last 5 or 6 months as compared to something like a Titan. So the same way, what happens in banks and ITs, when the large cap ITs start to outperform, people start betting on the mid cap IT stocks because they move a little more. Similar with banks, when private banks move, people start bidding public sector banks. So now people are willing to go down the quality ladder, looking at attractive valuations, because that's how bull markets work. During bear markets or during markets of consolidation, people start moving to the leaders.
Well, that's correct. But, to sum up the discussion, if I say, point out 2 things that you'll be really watching out for from the entire FMCG basket when it comes to third quarter earnings, what would you be, looking out for?
First thing I'll be looking out for, any signs of growth. Any signs of growth. Yeah. That will be the most important thing. Second thing that I'll be looking out for is, how do these discretionary players outperform the staples players?
Okay.
If that outperformance starts to reduce, then that's a problem. If that outperformance starts to increase, then it's even better, because if and when the staples bit recovers, then you have steady growth across the board. You don't want a situation where staples starts to recover and discretionary starts to slow down, because then you're back again to square one.
Well, that's correct. Well, thanks Mangalam for joining in, putting things into perspective. And now, of course, it's time for us to head to the canteen, since we're talking FMCG, get the Maggies and coffees out. But I won't hold you up, because you have to go for the HUL
other
press
shows
conference as well. And HUL press conference in the evening as well, right? Yeah. But, to our viewers, thanks a lot for tuning in. We'll, of course, be getting you live coverage of the earnings as and when they trickle in. But for now, it's a goodbye from me. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.